The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Monday, the 22nd of March, 2021. On the podcast today, Russ Mould, investment director at stockbroker AJ Bell, talks about Turkey's currency dropping by over 10% and why it could be relevant for UK investors. Also on the podcast, Alan Green, the CEO of Brand Communications, talks about Coinsilium, Mirriad Advertising and Caerus Mineral Resources. Plus, as always, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most read RNSs too. By the way, you can check out both these lists at voxmarkets.co.uk. There's plenty of the content. There's an article there on 88 Energy, UJO, Union Jack Oil, Amrit Pharma, there's one in Tech Capital, lots on the market as well. Exercises option to acquire Glanty. Check that out. And of course, don't forget a COVID-19 index. The biggest riser there is Dev Clever Holdings, up 10%. The 36.5, and biggest faller, Novocyte, down 2.8% to 733. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Russ Mould, investment director at stockbroker AJ Bell. It's a Monday, not a Friday, by the way, just reminding people, because people are thinking, hey, what's happened with the weekend? Let's go.
Weekend did go by in a flash, though, didn't it? As usual.
Yeah, exactly. So, I don't know if you... do you ever watch rugby, Russ? I mean, Wales. I'm from Wales, and it was disappointing on the weekend.
Yeah, and you must have been absolutely gutted. Yes, that must have been desperately frustrating. I used to be a Harlequin season ticket holder, actually, when I lived in London.
Oh, okay, yeah.
Yeah, so quite a fan of the old Oval Bowl game.
Yeah. But do you know what? I mean, it's sport. Do you know what? I've had discussions about people about gambling and investing, right? And difference. I said,
big difference.
Big difference. Investing, you can manipulate the odds to your favour a little bit if you do research and take certain precautions. You can't. And if you look at rugby, actually, Six Nations, England came into this, everyone thought, they're the favourites, or Scotland, or France, and England's had a terrible year. No one even backed Wales at all, and Wales almost won the Grand Slam. That's why, if they're gambling, it really is just chucking money into a bit of hope, isn't it? That's what it is, really,
I like a bet on the horses, but and I will kid myself if I can try and stack the odds in my favour by finding what I think is value.
Yeah.
But in the end, if the jockey makes a mistake, or the going changes, or the horse falls over, I've lost 100% of my money.
Yeah.
Whereas in investing, if you're doing it right, and again, what you're trying to do is first of all protect the downside, and then lay the foundations for upside. So yes, companies can go bust, and share prices can go to zero, but it's pretty rare.
Yeah.
And I think that for me is a massive difference. Yeah, I will look at a racehorse field, and I will say, well, I don't fancy that, I don't really like backing favourites, and try and stack the odds in my favour by picking a horse that I think whose odds are not fairly represented by its chance, so the odds are bigger than they should be. But yeah, my risk, my downside is 100%, and I would like to think if I'm doing investing properly, then I can protect myself from that. So I think that is one of the biggest and most fundamental differences between the two. Yes, and also investing is a very, very long-term game. Gambling, clearly, is not, whether it's a spin of the wheel or a 8-minute steeplechase or whatever it happens to be. Yes.
Yeah. And did you see that guy in Cheltenham last week? He had that 5-leg accumulator, and he was contemplating whether to take the $250,000 without the last leg, or go for the spot, a sure favourite. And someone on Twitter said to me, you should go for the favourite, because that favourite will easily do it. They use more colourful language than that, because that favourite will easily win the last leg, because it's 4-9 or whatever, and it fell at the second hurdle. And exactly.
Yeah, there you go.
So nothing. I mean, nothing's ever nailed on with sports gambling.
You wouldn't go and watch it if it was, would you?
No, exactly. Yeah. Do you know what? And I always say with rugby, if you've got two sides and one is clear favourite, always bet in the underdog in a 2-horse race like that, because you never know. You only get half decent odds. Because it's happened before where Japan have beaten like South Africa, and you never would have expected that. Things do happen like that. So it's a bit of fun. But anyway, let's talk about what's not a bit of fun. Do you know what? In fact, we've got a holiday holiday booked for Turkey at the end of the year. I'm hoping it'll go ahead.
It's getting cheaper by the day, mate. I can tell you the way things are going. So.
I saw that. So President Erdogan has sacked, isn't he, the finance minister?
He sacked the central bank governor for the third time in 3 years.
How does he keep coming back? It's a revolving door there.
Yeah.
So I'm booked to go to Turkey for holidays at the end of the year, Russ. And I'm just wondering if it goes ahead or not, but it looks like it's got a better deal, doesn't it?
Yeah, well, I think certainly, don't know whether it'll go ahead, but if you get there, it's going to be a lot cheaper because the Turkish lira is down 10% today because the President Erdogan has sacked his third central bank governor in 3 years, and he sacked him for putting interest rates up. Now, you might think that sounds a bit unusual, and Turkey has got, on the face of it, a pretty healthy balance sheet. Its debt to GDP, according to the Bank of International Settlements, is about 40%. If you were in the UK, US or Europe, you'd be pawing the ground to have debt to GDP down at 40%. You'd think it was Christmas. But with Turkey, the problem is that more than half of that debt is funded by overseas lenders.
Okay.
So if the money goes someplace else, they've got a funding problem. And if the lira goes through the floor, then that debt becomes a lot more expensive to service. There's higher interest payments in lira terms, and that sucks money out of the Turkish economy. So there's a very, very difficult balancing act to manage here. And the previous central bank governors had all put interest rates up to shore up the lira, which has halved in the last 3 years, and to keep overseas money happy. Now, President Erdogan doesn't like this. He's got, and I can, up to a point, I can see where he's coming from, because the International Monetary Fund says, look, dear Mr. Emerging Market or Mrs. Emerging Market, shove up your interest rates, keep Western lenders happy, and we'll go through a period of austerity, and we will support your economy, which is exactly what the Western economies are not having to do, because the IMF isn't leaning on them, even though they're printing money like it's confetti at the minute. So I can frankly see why, just from an economic perspective, he feels that there are certain double standards being operated, shall we say. I'd also point out that he actually was elected in 2001 after austerity was imposed by the IMF in response to some debt aid. And so, for him politically to go back on that would be pretty tricky as well. He's also on record as saying that interest rates are the mother of all evil. So again, if you lend money to Mr. Erdogan, President Erdogan, you've got to go in knowing going in with your eyes wide open. He wants the economy to grow. He wants jobs to be created, and he wants his people to be happy, like any president does. And his legitimacy rests on that. And clearly, jacking interest rates up may keep overseas lenders and overseas markets happy, but it could have a slowing effect upon the Turkish economy at what, let's face it, is a difficult time for most economies right now because of the global pandemic. So it's a difficult balancing act. But he's just got through his third central bank governor in 3 years, and international markets are going, not very happy about this. Now, on the face of it, most of you listeners are going, why on earth are you two banging on about Turkey?
Because I'm going on holidays there.
Well, there's that to it. Yeah. But in terms of their portfolios, they're going, well, okay, so of Turkey's 276 billion of debt, about half of it comes from overseas lenders, and the bulk of that is with Spanish, French, Italian and German banks. HSBC is in for about a tenth of that, by the way. Okay. So that's the one the British bank with a bit of it's got about 10 billion in there, so it's got about a tenth of the overseas exposure. So there is some potential contagion there, though it's nowhere near as big as it was 3 years ago. Even so, it's that sort of ripple effect that can catch people off guard. Who would have thought in 1998 that Malaysia devaluing the ringgit would have been one of the precursors of a major international financial crisis, because that then rippled through Korea, the Philippines and Thailand. That roiled emerging markets. Money began to pull out. That then tipped Russia over the edge in 1998. And then we actually got a wicked bear market in equities that lasted about 5 months, when the FTSE All-Share lost 20% and so did the Dow Jones Industrials on near as makes no difference. So it's the interconnectedness of things that can be tricky. And what you tend to see with financial markets is, as we all know, they climb the wall of worry, which they've done brilliantly over the last 12 months. Yeah. But then the second half of that saying, which people tend to forget, is they slide down the slope of hope. Because when expectations are higher, your risk of disappointment is greater, and an unexpected shock just could give people a little bit of pause for thoughts. I'm not painting it black, but I am saying mind your eye because, the good news is this isn't enough to do mortal damage to Spanish, French, Italian banks or HSBC. It just adds to the existing troubles that they've got. But it might make them a little bit less able to lend in their domestic economies at a time when they frankly need the money. Now, the really big doomsday scenarios for Western markets, and I stress Western markets, are if Turkey defaults, which, given that President Erdogan, again, that mother of all evils thing, it is not entirely impossible, but it would leave Turkey locked out of international markets for a long time and probably make things worse in the long run. Mm-hmm. So, you wouldn't necessarily think. But in a worst-case scenario, what does any country do to stop money leaving its borders? It imposes capital controls. And the Asians and Malaysia did that in 1998. So people who had money in Malaysia couldn't get out. Mm. So fund managers then found themselves, well, our customers want money out of their emerging market funds. I can't sell my Malaysian assets because I can't get my money out. So I'll sell my Korean assets on my data. And that's how the domino effect starts. So if you can't sell somewhere, you find people being forced sellers somewhere else. And that's why you get, in the end, all correlations go to one. And so I think that's what you wouldn't want to see. And again, Mr. Erdogan knows that hitting that sort of button is not going to help anybody. So you wouldn't want to see it. But in that, if you want to know why Turkey would suddenly be a problem, it would be if Turkey says, well, actually, we're not going to pay you, or we're just not going to let you get your money out of the country. And both seem highly unlikely. Do keep your eye on it. But then the most logical thing he'll do is devalue the lira. But that does obviously make your holiday look pretty good if you get there. But it does make things, again, difficult for Turkey in the short term because it's overseas lending. So there are still some challenges there for what is in the end a big and, from a geopolitical point of view, phenomenally important country given where it sits between Europe and the Middle East and Russia.
Yeah, but as far as an investor is concerned, you can never keep your eye on all these little red lights that go on and off on a daily basis. So I suppose the lesson at the end of the day is I suppose, diversity a little bit, isn't it? I mean, because you only protect, so you can't sell all your stocks on every warning light.
Nor should you, because, again, then you've got two decisions. When to get out, when to get back in. And think of all the fees and commissions and things that you get and possibly tax that you're going to incur. So, again, it's calibrate risk. It's, don't go all in when things look great. Don't go all out when things look bad. And if you want to just nudge things around the edges, do it. At the moment, we've had a phenomenal run. There's one or two things that are flashing red out there. We're seeing some pressure in the bond markets. We're seeing some pressure in emerging markets. And it just went, as you were saying, a few weeks ago, you said, well, I wouldn't be shocked if things sold off when everybody's told that go out and play again because of the vaccinations. And, you have seen a little bit of that recently because markets are now getting worried about a very strong recovery and what that could mean for inflation, whether interest rates get forced up more quickly than we think. So it's the old thing, climb the wall of worry, but beware of the slope of hope. And the higher expectations get, as prices get higher, the greater the danger is that something comes up and sandbags you. So again, if anything, it's, do the opposite to the crowd. Take a little bit of risk off the table when people are getting bullish and put a little bit of risk on the table when people are getting bearish. Yeah, and it's always that time of when people, the journey is always, almost more powerful. The hope, the hype and the potential of the journey. There you go.
Like I've seen so many people say, I don't understand stock markets. My company released good news today and the share price went down. I thought, well, yeah, but look at the last 3 months. The share price has been rising towards that news. So,
there you go. That's it.
And that happens a lot, doesn't it? So that's the most
better
powerful
to travel
force.
than arrive.
Exactly. Marvellous stuff. Well, Russ, we'll speak to you next week, fella. Thanks very much.
I look forward to it.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Alan Green, CEO of Brand Communications. You're Al.
Morning, Just. Not too bad, thanks. How are you, sir?
Well, I've just been whinging to you. I've got a toothache, it's really annoying. So on the weekend I was a bit ill with it, but my jaw. But I went inside then. I thought it made me laugh. My wife, I don't know if it's a home green grant scheme that's been slated around, because apparently it's really bad. It's been botched. If you look on the BBC News site today, the biggest CO2 emissions is households, apparently, and they're giving grants for all kinds of ways to stop CO2 or carbon, whatever, and that's lagging. You can have things done, you can have grants, So we wanted this sort of house, I think it rendered, you can have it rendered, but it's literally, you can't get through to anyone. It's a farce of a scheme, and it is. You can see why it's coming in for so much stick. And we got a local MP here called Steve Bryant, and my wife just said to me, I've been trying to get through to everyone. So even the local MP said, so does Steve Bryant, is it the same guy who's got a radio show? I said, what radio show? She went, Steve Bryant in the afternoon. I said, are you kidding? Do you think an MP is going to have a drive time show? I said, "Oh, Steve Wright, you maniac."
Steve Wright, that's a.
I think she was thinking about calling him up on Steve Wright in the afternoon. Steve Bryant. It's not Steve Wright. Steve Wright, not Steve Bryant. I just couldn't stop laughing at that. She started laughing at how stupid that sounded. A local MP doing a drive time show.
Well, why not? Stranger things happen. I have to say, I do like Steve Wright. I think some of the voices he does are very good indeed, and his impressions of Jeremy Vine are very funny indeed.
Yeah, I'm going to point out it's not Steve Bryant, it's Steve Wright.
Steve Bryant, yeah. Steve Bryant in the afternoon.
Yeah. The power of the jingle, eh? Marvellous. Let's go to a stock sale. I'll tell you some good news out today. I don't know if you saw that, but the AstraZeneca jab. And there's been a big US trial. And there's been all these European idiots criticising it.
They're only jealous. I mean, Macron's only jealous because Sanofi failed miserably to produce anything at all.
And Sanofi failed, so that would obviously there's lack of vaccine for France and Europe because of that. And then what do? Ban AstraZeneca. Hang on, this is the most widely available, cheapest, easy to store, good in the supply chain, and you ban it from the European Union pretty much for unsubstantiated reasons, which have now been proven by every, health and medical council to be safe. But this long-awaited trial from the US, over 30,000 volunteers took part, mostly in America, but also Chile and Peru. Out today, 79% effective at stopping symptomatic COVID disease, and 100% effective at preventing people from falling ill or seriously ill. And if you look at our stats, and I think I just said on Twitter, I said this is very good news for the reopening of the economy because this is the one that's been widely used in this country. And if you look at the hospital admissions, they've gone now it's dropped by 90% from the peak.
Yeah.
They were at 4,500. Now they're down below 420 people per day, which across this nation is nothing. And 80% of those people that were filling the beds were over 80s. So now they've been vaccinated. Even now, if they stop it now, it doesn't really matter because if me or you get COVID, it will have a whinge and probably be a bit ill, but we won't be put into hospital, And that's the problem. That's why we're locked down, is because you can't have the NHS overrun, and because it'll impact every other disease or illness around. So this is very good news, I think,
It's brilliant news, and yes, I agree, Just. I mean, I've already had my first jab, so and I was fine with that. I actually had the Pfizer jab, funnily enough. My wife only had the Astra jab, and I think I felt a bit lousy the following day, and she did. She didn't really have any.
I did. I did AstraZeneca. I felt a bit rough for 2 days, but not. I'm obviously a bit of a baby because I do a morning run, do some weights. I did that. I still did that for 2 days. I was feeling a bit rough, but it was nothing more than coldy symptoms,
Yeah, well, I was out cycling, so going for my cycle rides, which is all part of my keep fit regime, or rather, should I say, my avoiding keeping fat regime. So fairly effective. But I think also going back to the AstraZeneca trial in the US, there were no safety issues regarding blood clots either, and that's obviously very important because that's what all the Europeans have been whinging about. But I think Macron started it, and he was just dead jealous that the brilliant old UK had come up with and AstraZeneca had come up with a vaccine, and Sanofi, the flagship French pharmaceutical company, had failed abjectly to do so. So
and do you know what? It just sort of people are going to whinge about this bit of politics, but it does sort of highlight the issues when you have a bureaucratic process where lots of people have inputs, and generally sometimes you just need one leader. I'm not saying Boris Johnson is a good leader. I'm not saying that. What I'm saying is when you have 27 countries giving their opinion on something, you don't get things done very quickly, It's a very unwieldy process. And so sometimes you've really just got to go for it and act quickly, because success of this vaccine is down to AstraZeneca and the NHS. And it's really worked in UK. Our program's been phenomenal. But when you get like a European Union, it doesn't work. They're really behind the curve. It doesn't work.
Yeah. I think that's a very good point, actually, Jess. What's happened with AstraZeneca manifestly illustrates how well the UK can do it by itself, and how and the fact that we don't have to wait for the vaccine to be rubber stamped by the European bureaucracy, which would take years and forever, and we can crack on and look where we are now. That's
it's a double whammy for them, because a lot of the European countries, of course, rely on tourism, and now because they're so far behind, it means our domestic economy, staycations and all that, and our restaurants, bars, pubs over the summer will probably do very well because we'll be unlocked. And yet they won't get any travellers, inward travellers. They'll probably still be locked down in places or have certain restrictions. So it's a double whammy for them. They've missed out on our sort of holiday makers, and they probably won't be able to spend that much themselves because they'll be locked up as well. So they've really messed up massively, So I'm good. In this case, I'm glad we're out of the EU,
Absolutely. Well, I'm glad we're out of the EU anyway. I think we've done the right thing, and I'm sure our economy will benefit from it in the longer term. There's obviously going to be some short-term pain, but I think it's the right decision for us. And what's happened with AstraZeneca, I think, is a great example of that.
Yeah. Anyway, listen, a bit of politics. I know some people say you should never talk politics and religion, but there we are.
We never do. No.
But let's go on to stocks then, Al. What are you looking at?
No. Yeah. Okay, stocks. So 3 stocks for you. Want to highlight Coinsilium, Aquis-listed Coinsilium. I say Aquis listed. They're also listed on the OTC venture market in the US. Coin, of course, is the EPIC code in the UK, and CINGF is the EPIC code in the US. And this company has had a phenomenal week. I actually interviewed Malcolm Palley, the chairman, on Tuesday last week, and that interview went viral across some US bulletin boards. And really, it was the performance in the US that I think helped drive the performance for UK investors in Aquis. So Coinsilium, the first blockchain company to be listed or to have an IPO on the Aquis market in the UK. Of course, that was back in 2015. Was originally invested into blockchain projects and crypto projects, and the company moved to Cyprus a couple of years ago because the Cyprus government basically they're far more pro companies operating within the crypto and blockchain space, and the regulatory structure there is very firm and very clear on what the companies can and cannot do. So it was a clear framework. They took the decision to move. Middle of last year, the company pivoted its business model and said it was going to set up a laboratory and a series of initiatives to develop its offering into the NFT space. And of course, we've spoken in previous weeks just about non-fungible tokens and the explosion in value that we're seeing, and pieces of art selling for huge amounts of money, digital art, and of course bands releasing their albums as NFTs. And we're still right at the start of this market. So of course, NFTs currently based on or based around smart contracts in Ethereum, and Coinsilium have set up. They're in the process of setting up, as announced this morning, a joint venture with Endorse called Nifty Labs to develop the NFT offering and to provide NFT solutions for companies seeking to offer or digitize assets and collectibles. So the first deal for the company is, and the company announced last week that it had started work on this particular project. Is work with the Gibraltar Philatelic Bureau to produce a digital NFT counterpart to a limited edition postage stamp. The stamps go on sale on the 17th of May. You can start to place your orders in the middle of April next year. This has already been successfully trialled and sold in the past. The Austrian Post Office undertook a similar exercise last year, and we're going to see a lot more of this. So this is really the first project for Coinsilium and the Nifty Labs initiative as they progress forward. In terms of the company itself, it's fully funded through to January next year. There was a further 350,000 injection from IOV Labs at the start of the year, and another 250,000 was raised in warrant exercises. And the company announced this morning that it was progressing further with the Nifty Labs operation and bringing that to fruition. Eddie Travier is the CEO, and he also was the co-founder and launched Seedcoin a few years ago, and has a lot of expertise in the space. He has a lot of experience in the private equity sector as well. That's private equity in the crypto space too. Malcolm Pelly, of course, we know he's chairman and co-founder, and has also heavily involved with Mining Maven, and Craig Brown, of course, CEO of ECR Minerals, is also on the board as an non-exec. I interviewed Malcolm last week, and he discussed the outlook for the year and how the company expected to progress, and that clearly resonated with investors, as I say. And we saw the share price jump from what was on March the 8th, the price was 6.6p, and we hit a high of 34p last week. Currently trading at just under 29p today, which gives the company a market capitalization of 45 million. But of course, as we've seen in the space, company valuations, particularly those I think that are in the crypto and NFT space, have really risen rapidly over the past few years. Whether this will continue to do so, of course, remains to be seen. But nonetheless, there is a huge amount of interest in the space, and I think Coinsilium is a very good vehicle to take full advantage of that and to deliver growth in a number of areas. I mean, looking at the NFT space, it's such a nebulous space. There's so many potential applications here, and I think Coinsilium, probably better than most in the market, will have some very good ideas on how to exploit this going forward.
Yeah, I tell you another one is doing well as well. I've had George on the podcast quite a few times. Is KR1 done phenomenally well out of investing in cryptos and staking and all that stuff. And they've now got dividend payments pretty much off staking contracts, but they've done so well. Again, on the Aquis, and I think AIM have been a bit short-sighted here, really not allowing companies to come on. I think that'll change, because there's a huge amount of liquidity now. People are understanding these are assets pretty much, not just Wild West trading platforms or currencies or cryptos, but George often comes on the podcast, but they've done phenomenally well. And it's just the thing, being an early adopter, of a new technology, and then getting it right, and that's the way forward, So
absolutely, I think you're absolutely right about Aquis Market too. Aquis Market has benefited from having the companies listed on it, and AIM has really lost out. And I'm sure this will, the increased liquidity and volumes that Aquis are seeing will enable them to further develop the Aquis Market per se. So that's a good thing. Just going back to Coinsilium a second, they also have a lot of crypto assets in addition to the cash that I mentioned. They've got a very strong portfolio of crypto assets. It's currently around $2 million, and of course that if the Bitcoin price rises, then of course that will rise accordingly. So very well funded, well positioned, and I think a very exciting year ahead.
Yeah, so KR1 20 pence pretty much in December. They're now £2.8.
Wow. That's growth.
Nice turn bag. Cool, marvellous. Okay, what's next, Al?
Okay, so Mirriad. I just wanted to touch base on Mirriad again. We of course have spoken several times about Mirriad. Mirriad now during lockdown, of course, we're all watching box sets and we're all watching Netflix and programs on streaming channels, Amazon and so on. And of course the advertisements that come on these channels, we had the option to skip ad and wind through. And of course for us that's great because we enjoy seamless, uninterrupted TV. But for advertisers, it creates something of a problem because the advertisers simply aren't getting value from their advertising spend as they would have done previously. So Mirriad have been working on an AI platform for the last few years, which basically inserts advertising into streaming content. So as you watch a program, just if we watched say a series and there's a scene in the kitchen and there's a pack of beer on the table, you might see Corona beer, I might see
Baby Shannon.
I see Babycham. Yeah, of course. Yeah, I see Babycham.
That's more your demographic. Is it Babycham for you and beer for me? Yeah.
Totally. Yeah. Probably pink Babycham too. Yeah, absolutely. Yeah. But that's the power of the technology, and of course this is this as many technologies are often pioneered. It's been tested across China. The company has a deal with Tencent, which
good rapper Tencent. Oh, it's 50 cent, sorry. Yeah. And also taking the advertising analogy a bit further, if it went to the wardrobes in a house, I would see a nice suit and you would see sort of a full PVC GIMP sort of suit in you.
Well, that's right, just
more appropriate to your searching internet browsing and all that stuff, isn't it?
Well, of course, yeah, but then again, your S&M tendencies, you might see something similar, maybe I don't know, maybe a billet board with a strap. Yeah. Where are we going with this? Yeah, anyway, so back to Mirriad. The clients, of course, in China, Enterprise, WeChat, China Mobile, and so on, and the company have gradually progressed the offering, but the real step forward or step change to the company came last autumn when the company listed on the OTC market. They're developing a very strong presence in the US, and they've been tested by a number of major platforms in the US and major TV channels. So the breakthrough and the listing on the OTC market literally saw the share price move from 20p up to 45, 50p. And of course, if you look at the chart for the year, we've just seen steady growth and a steady performance since then, with the shares currently trading at 57p. The company's also done a deal with several music channels where it's looking at the back catalogue of music videos and retrospectively inserting content into those videos. An example of that was a Code Line video, the Irish band. They inserted some content into that. Late November last year, the company raised a further 23 million in a placing at 40 pence with a further open offer to investors at the same level. It said trading was in line with revenue guidance of 2.2 million. Now that's versus a market cap of 161 million, so that's a very racy valuation right now. But the deals that it has, the companies it's working with, if this is adopted universally, that could still appear to be small change in a few years' time. But that's just the way technology companies can be valued. The company also bought in Kelsey Skinner, former head at Alto Venture Capital and Touchstone Innovations. Bought her in early this year to help drive the growth of the company. And this is a great technology. It's a British company, and I think the technology, the application, our viewing habits now, it's really coming of age.
Yeah, but one could argue though it's the hype is priced in here, isn't it? I mean, a lot of it. They were turning over £1 million or something, just a couple of million, and they've valued it 160 odd. Wow, that is very racy.
It is racy. I agree, but I think that's the potential in the market. The size of the advertising market in streaming, there is a real problem for advertisers now that they're not getting the value for money they were, simply because we don't watch ads anymore. We tend to wind through them. So a different approach is required, and I think this has undergone extensive testing and trialing, and the data that they've received back from the trialing is that advertisers get very good return on investment and value for money from this sort of money. Particularly, when you're looking at the major brands like Coca-Cola or or big beer brands, that's obviously you want good recollection. You want people to remember the brand. So it's not subliminal because it's just there, maybe on the table in the kitchen in the background. But it's a very effective way of bringing brand advertising to the masses, whilst enabling them to watch their streaming TV programs uninterrupted.
Mm-hmm. Mm-hmm. Yeah, no, it can be big. I just think it's 160 million. On that revenue, they've got a lot to catch up there. Okay, so what's the last one, Al? Anything else?
Yeah, well, there's a company that's just listed. I wanted to bring to investors' attention. Now, of course, the commodity space, the growth in the commodity space, the many articles that we're seeing out there about the fact that we're entering a new super cycle for commodities is seeing a lot of mining companies develop assets and return to old assets that have previously produced commodities. One such company is Caerus Minerals, Caerus. The EPIC code is CMRS. This company listed at the end of last week, basically raised 2.25 million at 10p. Shares currently trading at 30.5p. Caerus Minerals has a portfolio of copper and gold licenses in Cyprus, and these are across brownfield sites, including former producing mines. And the company has set out.
How much spelling this?
2.25 million.
How am I spelling it? What's the ticker there?
CMRS.
CMRS. Okay, good. Got it.
Yep. Charlie Mike Romeo Sierra.
Yeah, got it.
Okay, so exploration is going to commence across these brownfield sites, and they're aiming to define a mineral resource estimate of between 20 to 30 million tons of copper at 1.5% and gold at 1 gram per ton. The mining. The Cyprus Mining Department has indicated that there are numerous what they refer to as remnant resources at a number of mines around Cyprus, including Calabasas, Cambia, Vrecchia, and also Black Pine. The first three are gold and copper assets, whilst Black Pine is a nickel and cobalt asset. And Calabasas, in fact, previously produced 4.68 million tons of copper. So it's a mine that has previously produced. Now, clearly, copper in the new battery age that we're entering, the new EV age, the price of copper has risen rapidly. So there's a very strong case for getting this mine back into production. The good thing is with Caerus, it has a very experienced team and an established presence in Cyprus. So they haven't raised the money, and then they're going to put a team together. The team's already in place, so they can crack on with this immediately. And that team consists of Martin Churchhouse, who is the chief executive, 35 years experience, formerly from Anglo American and Goldfields. It was a director previously at Georgia Mining Corporation and London Mining Corporation. The non-exec chairman, Mike Johnson, was the Rio Tinto chair of environmental engineering at Liverpool University. He also today is an external advisor to Rio Tinto, London and New Bolton, and has been on the board of a raft of well-known mining companies previously. So, huge amounts of experience between those two. The geologist is a fellow called Andrew Daniels, 30 years experience, worked with Anglo American, Menorco and WMC previously. So, clearly, there's no news yet. They've just raised the money. They're commencing work, but as a copper player, I think this is currently at a very attractive level to get into. Even though they raised the money at 10p, I think anything around there or just above there where we are now, it's a good opportunity to get in and get a stake in a company that's got assets in Cyprus.
Marvellous. And do you know what? And I'm not saying you should invest in them, of course, but do your own research. But Cyprus, you can always just pop over there and just on holidays and just say, while I'm here, look at my investment.
It's a lovely place, Cyprus.
In fact, I wouldn't do that because explorers, if you just small cap explorers, if you go and look at their operations, they're generally not that impressive. There's not a lot going on, to be honest.
Well, no. I mean, these are existing mines, so I mean, you can go and visit those anyway. But Cyprus is a lovely island. I was there a couple of years ago. It's a lovely place. If you want any more information, by the way, the website's very good. It's got all the information on there. Caerus Mineral Resources, all one word.com. But stick it in Google and you'll find it.
All one word.com. It's a good website.
Really,
alloneword.com.
Really long web address, isn't it? Yeah.
Right. Cheers for that, Al, and we'll speak to you next week, fella.
Cheers, Just. Speak next week, mate. All the best.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. At 5 on the market, non-mover there. In fact, joint with. It's just Net Scientific. Sorry, it's moving around. Up 17% at 62.5. At 4, My Health Checked, 4.2 pence non-mover. At 3, Dukemont Capital, up 28% to 1.025. At 2, New Formix, 11.11%, increase to 3.5. And at 1, Futura Medical PLC, it's 57.6% again. It's a big riser, and like I said, when stocks move sometimes, they can go bananas, and there's no knowing where it'll end. But if you are in a stock like this, and in fact, in my investment club, chatting with the guy who sold it too early on this, who's held it for a while, I said, don't keep looking at it. The best thing you can do is learn from it. Maybe on these big rises, put a stop loss in. So if it goes up, it comes back down, you can sell. But if it keeps going up, move the stop loss up. So you lock in some profit there when you get these crazy moves in stocks. Okay, it's time for the top 5 most read RNSs. They are as follows. In fact, most likely as well as Salt Lake Potash there, New Formix, but most, and Omega Diagnostics, Helium 1. Let's have a look. Ectech trading update. Yes, and at 4, Dukemont Capital Environmental Energy Project. At 3, MGC Pharmaceuticals Phase 3 clinical trial. At 2, 40 Pharma completion of merger. And at 1, Omega Diagnostics CE Mark Mologic COVID-19 lateral flow antigen test. That's it for the podcast. Thanks for listening. Much appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.